Hi, I'm George, and in this video, I'm going to walk you through the 3 ways to finance a property in Europe as a US citizen. Whether you're looking for a vacation home or an investment asset, the financing rules are the same. We're going to look at the traditional local mortgage, the US-based leverage strategy, and finally, the asset-backed mortgage. By the end of this video, you will understand the mechanics of each method and you will know exactly how to access low European interest rates without ever having to sell your US investments. Method 1. European mortgage. The first option is what most people assume they should do. You're buying property in France, so you walk into a French bank and ask for a mortgage. It sounds logical. And on paper, it can look very attractive. Right now, interest rates in Europe are generally lower than what you see in the United States. While US financing costs might be sitting higher, you can often find fixed rates in places like France or Spain that are significantly lower. So just looking at the cash flow, this seems like the winner. But here is the reality check. For a US citizen, getting a local mortgage in Europe is incredibly difficult. It is not because you're not wealthy enough, it is because of regulations. Most European banks are terrified of the IRS and the compliance rules involved with American clients. You might walk into 10 banks and 9 of them will simply tell you they don't lend to US persons. It is an automatic no. If you do find that one bank willing to work with you, get ready for a marathon. They will demand mountains of paperwork. You will likely need certified translations of your tax returns, proof of income, and a background check on your finances that feels invasive. And unlike in the US, where you might put down 10 or 20%, European banks often require non-residents to put down 30 or even 40% of the purchase price. The biggest risk, however, isn't the paperwork. It is the time. This process usually takes 3 to 4 months. In competitive markets like Paris, Barcelona, or Milan, sellers are not going to wait for you. If you come in with a mortgage condition that takes months to approve, and someone else comes in with a cash offer, you lose the deal. It is that simple. Method 2. The US HELOC. This leads us to the second method, which is often the default choice for buyers prioritizing speed. You utilize a home equity line of credit, or HELOC, on your primary residence in the United States. The strategy is straightforward. You leverage the equity in your American property, convert it into liquid cash, and wire that capital across the ocean to fund the acquisition. The primary advantage here is that you effectively arrive in Europe as a cash buyer. You're not waiting for a foreign bank to underwrite your financials. You can close in 2 weeks rather than 4 months. This gives you significant leverage. In many markets, the ability to close immediately allows you to negotiate a lower purchase price, potentially offsetting some of your transaction costs. However, the trade-off is the cost of capital. You're paying for that speed. Interest rates on US lines of credit are typically much higher than mortgage rates in Europe. You might find yourself paying double the interest rate you would get from a local European lender. So while you are securing the asset quickly, you are significantly increasing your monthly holding costs. It is an efficient solution for closing the deal, but mathematically, it is usually the most expensive one. Method 3. The asset-backed mortgage. This brings us to the third option. This is the sophisticated route used by high net worth families. It is not a standard mortgage, and it is not a simple line of credit. It is a hybrid structure called an asset-backed mortgage. Here's the problem with the first 2 methods. They both require you to come up with cash. With a standard European mortgage, you still need to sell investments to cover a 30 or 40% down payments. With a HELOC, you're engaging in another debt just to create that cash. The hybrid approach solves this by using 2 forms of collateral. You ask the European bank to finance the property, but instead of selling your stocks to pay down the payments, you simply pledge your US portfolio as additional security. The bank takes a mortgage on the new house and a pledge on your portfolio. Because they're double secured, they can often lend you up to 100% of the purchase price. The advantages here are structural. First, liquidity. You buy the property without putting a single euro of cash down. Your entire portfolio stays invested and compounding. Second, tax efficiency. Because you didn't sell assets for a down payment, you trigger 0 capital gains tax. And third, rates. Because the bank has liquid assets guaranteeing the loan, they view you as extremely low risk, giving you access to the lowest possible interest rate spreads available in the market. However, this is a specialized private banking product. You cannot walk into a retail bank and ask for it. Most European private banks cannot accept a portfolio held at a US bank as collateral. They will require the assets to be held in Europe to secure the loan. To navigate this, you need a specialist. Amber Lake Partners is the first SEC-registered wealth manager based in Monaco. This registration allows them to bridge this gap. They help you transfer your US portfolio in kind to a secure European custodian. This distinction is critical. In kind means you do not sell your stocks. You simply move the electronic shares from your US bank to their European bank. This triggers no capital gains taxes, but it places the assets in the right jurisdiction to secure your financing. If you have a portfolio of at least $1 million and want to see if you qualify for this 100% financing structure, use the link in the description to speak with their team. Ultimately, buying property in Europe comes down to how efficiently you want to use your capital. You can take the traditional route, deal with the paperwork, and freeze 30% of your money in a down payment. You can use a US credit line for speed, but pay a premium for every month you hold the loan. Or you can use the asset-backed model. It is the only path that allows you to finance 100% of the purchase, keep your portfolio growing, and secure the lowest rates in the market. If that level of capital efficiency makes sense to you, check the link below to speak with Amber Lake, and I will see you in the next video.